Good evening. Welcome to Admiral Markets webinar. Today's focus is on the U.S. presidential elections and the potential impact on the Forex, CFD, and financial markets. My name is Chris. Together with Nenad, we're going to review this topic together in a bit longer and special webinar of today. First of all, though, before we dive into today's topic, please be aware that this webinar is shown to a global audience, but may not be suitable for everyone. Please seek advice. Please take a look at admiralmarketsglobal.com. I should say, select your country of residence and contact the appropriate entity to find out more details on that. Furthermore, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar and later on recording, you agree with this disclaimer, plus you are aware of the risk involved when trading. All right, so Nenad and I are going to dive into today's topic and explain all the details and discuss what we will expect. Now, of course, needless to say that whatever could happen throughout today, tomorrow, the entire week, could be quite volatile. There could be a lot of reactions back and forth, and there could be things that we didn't think about, there could be different reactions than we expect. So we're going to explain our thoughts. We're going to give our kind of the scenarios we expect, but there could be a lot of variances as time develops, and depending on how the political events also occur, there could be some discrepancies in that. So we have another webinar, therefore, tomorrow morning, Wednesday morning, but also Thursday evening, and we will keep you up to date as the things develop. But generally speaking, we're going to be talking just a tad about politics, I guess, but then we'll soon switch over to impact of the winner on the short and long term, and we're going to review basically how the financial markets could react on a win from both the candidates. Now, there are more candidates actually running, but if you look at the polls, then there are really only two serious candidates at the moment. That is Ms. Clinton from the Democratic Party and Mr. Trump from the Republican Party. So we'll be focusing on those two, just from a practical point of view. Well, from a political point of view, obviously everyone, I guess, has their own political kind of opinion. And first of all, Nenad and I do not want to discourage any political opinion. We have, I guess we have ours, but it's really not too important. What we really want to focus on is just what we expect for the financial markets. That's why we're here. Our view is not so much to share our political views, and if you think that we do, or that our analysis is somehow biased towards one of the two candidates, then it's in our opinion not so. We just want to give you a balanced analysis of what really we expect. Whether that will happen, we don't know. This is a huge political event. It's very volatile, therefore also riskier than other events. All right. Generally speaking, though, then I do observe, and I think that generally speaking, I would say most of you would agree, that in the U.S. there's, I think, always a fierce debate with elections. This time around, it seems to be harsher. The environment between both camps seems to be tougher towards each other. It seems like the trust between the two sides, Democrats and Republicans, seems to be very low, and there seems to be quite a rift at this moment in the political arena. So just observing that could create some future problems on the political front, especially if, of course, Republicans control part of the government, like the Senate and the House, and the Democrats have the president. There could be some difficulty to govern and move forward in the next years if this division continues. As far as I can see, I don't see any improvement on that front. So this seems to be a structural thing the division seems to be expanding and increasing, and we'll have to see how this develops in the next few years, to how far that continues. That could be, a potential disruptor, but I don't think necessarily now as yet. Yes, the elections, of course, depends also how the loser will react to the elections as well. But this is kind of in the background and could, be a long-term or medium-term development that we might need to keep an eye on. All right, the political friction, basically, in the U.S. All right, so with that said, if you have any questions, by the way, please feel free to ask us. We're going to just dive into what we could expect. Now, from the polls, it basically seems that Clinton has an edge. Now, how much edge remains to be seen, depending on which website you look at. There are different percentages, but all in all, the winner takes basically the seats or the votes from a state. So you need to collect states, and some states have more votes than others. So California has a lot of votes. It's a big state. A lot of people live there. So if you win California, you right away get 55. Now you need 270 to win. Clinton seems to have more states that are solid in her side. She, depending on how you look at it, she's maybe just a bit shy of the 270. So she might need only one or few swing states to win. But if Trump does collect all the swing states, then he could win it. So Trump can win, but he needs to really have a good series in those swing states. Clinton just needs one or two, and she's probably won it. All right, this gets into quite a lot of math, so I won't dive into that. That's why Clinton has an edge. That's why most think that she has a 65% chance. Some think it's even up to 85% chance. All right, that depends, I guess, on certain calculations, etc. So that's the expectation at the moment, that Clinton will win, as you can see from the percentages, 65 to 85, and the Trump expectation between 15 and 35. Now the Senate is expected, now I just saw a recent shift that it's a bit less now than 60. Just a few days ago, there was expectation that the Democrats have a slight edge in winning back the Senate, but there is a lower chance that they'll win back the House. If the Democrats win both, then they have, of course, a bit more space to implement their or Clinton's policy ideas. If Republicans keep both, the Senate and House, there's going to be more of a gridlock between the two, and there could be quite a lot of difficulties in governing the country. So looking at these stats, all right, it's, there's a good chance that you'll get a Democratic president. The Senate is up for grabs. That's very close to 50-50, but you'll have a Republican House. Other option could be maybe a very close presidential election, right? And that the Republicans hold the Senate and House. And if it's very close, you could get, basically developments like in 2000 when Al Gore and George Bush were extremely close to each other. There was a cliff or nail-biter in Florida, right? And that could delay and the whole process and make things a bit insecure. Now, the market doesn't like uncertainty like that. That could be, an event that might impact the markets a lot in terms of volatility or even low liquidity. So anytime there's a clear winner, there will be a less lingering effect. If there's any doubt, any close calls there, that could prolong basically volatility, rapid ups and downs, depending on news events, depending on what people say, and also there could be, basically slow price action at other points. So there could be a lot of mixture of quick and slow, difficult trading environment. Mario is asking, what about the correlation between the states Florida is Nevada votes. I don't know about that particular correlation. I know that both are swing states. Both are important for both camps. I think that both are really, really, really tight at this moment. As far as I see, I don't know any correlation about between the two. Um, but yeah, there are a couple of swing states very important. New Hampshire, North Carolina, Florida, Nevada, indeed. Uh, but can Clinton keep Pennsylvania? Can she keep Michigan, Wisconsin? Um, Iowa seems to be leaning towards Trump. Ohio seems to be leaning towards Trump at this moment. Um, those he would have to still kind of solidify to have a chance. And I think I mentioned all the important swing states at this moment. Others seem to be quite solid. Obviously, the West is Clinton. The Central West is Trump. Texas was slightly for a week or so going towards, it's toss-up, but now it's back into Republican territory as it normally is. So nothing radical there. Where can we find out the instant announcement about presidential candidate? So it's not an instant. There's going to be basically a kind of a slow progress towards an announcement. Basically, you're going to see states drip in their results. So it's going to be like a Brexit. There's not going to be basically one announcement and that's it, like, for instance, the Swiss National Bank. All right? It's not going to be like that. Brexit also, you had counties or parts in the UK that were announcing their votes and their percentages slowly but surely. So you're basically getting minute by minute, hour by hour, you're getting a more clear picture of how the development has gone, and you're going to get a better understanding who's going to most likely win. So that's going to be the same in the U.S. from Wednesday, our time, Central European time. I'm talking about our time is Central European time because Nenad and I are in Central European time. From 1 a.m., I guess, in the night, you're going to be seeing already the first results. And every time there are going to be more and more states dripping in, more and more polls and exit polls and results. The percentages are going to creep up. And, somewhere in the morning, you'll have that winner most likely announced, or very likely winner announced. So as I was saying, let's take a look at the map. Indeed, that's a good idea. I'm not sure if I have a map here, actually. I don't, but that's okay. Let me quickly add the map here. I'll just look at it. We have it on our website on blog article here. We have a complete guide to the U.S. presidential elections and the best approach for Forex and financial markets. So if you want to reread anything after this webinar, you can most likely find a lot of that already in this article. It's quite long. It covers all kinds of aspects, so that you can find in the Trader blog. All right. The map too, I didn't add it here, but let's take a look at the map. That's a very good idea. All right. So here you can see now Iowa. This is an older map, so you can see Iowa is still indicated as a swing. Now I would say it's pink. It's leaning Republican. Ohio too, leaning Republican. Basically, swings. Georgia, I would say, is also leaning Republican at the moment. Real swing. Texas too, by the way. So real swing states. Are Nevada. I would say Florida, North Carolina at the moment, and New Hampshire. Right now, that's assuming that Trump can hold Iowa and Ohio, and we'll have to see if Clinton can hold Pennsylvania, Michigan, Wisconsin, and Minnesota. So if she does, if she holds those four, which she is expected to do, but then adds any of these 5 swing states, sorry, then it should be enough for the win, as far as I remember my math correctly. But I think if Trump wins these 5 swing states, then he's back in the game. He's very close, and I think he needs one of these blue kind of states to flip to his side, if I remember correctly. All right, but I'm sure you can find more up-to-date maps as well. This one is come from a few days ago still. Leon has a link right there. Let me share it with you, and you can look at the up-to-date map. But there are a lot of sources there you will find nowadays. There's full of it. Non-stop news on this. There you go. The map generally is pretty correct, but Iowa and Ohio are leaning red. I would say Georgia 2, Texas 2. Alrighty. There's also a timetable in that link Leon sent, by the way. So let's move on, because I think most of you will be able to find, a map. Too close to call is really, I think, what the market would probably dislike the most, because there's a lot of uncertainty about that, and there could be thin markets, 50, 100 pips or more, right? Moves. This is really news trading, interpreting the announcements. These could be huge flashes. Difficult to trade, I think. So I think that a difficult environment. This is exactly where a lot of things can go wrong when you're trading if you don't pick up the news fast enough and stuff like that. So this is basically the most difficult. So let's ask maybe Nenad, if he wants to actually add anything. I went a bit fast here at the beginning regarding maybe the political landscape and yeah, basically the political kind of division that we're seeing. Let's see if Nenad wants to maybe add something here.
Hi guys, and hi Chris. Yeah, first part of this webinar is actually we are explaining political situation and how it may develop, and later during the webinar we will delve into some possible price movements. But have in mind that the volatility will be huge, and you definitely cannot trade it as standard session recap or standard analysis, whatever. You definitely need to be prepared for a big volatility. So most of all, we need to see those breakout points that we will actually exploit. I would just actually add a few things about, someone asked about Nevada and Florida. Well, the thing is that I think the latest information were suggesting that Clinton has a 4-point edge in Pennsylvania, and in Arizona Trump has like 5% of edge. But what is surprising for me maybe is Florida, because Florida was actually leaned towards Clinton, and now it's only 2% of difference between Clinton and Trump. Latest information suggests 49, I think, percent of voters for Clinton and 47% for Trump. And well, I mean, for me it's a little bit maybe surprising, but definitely more surprising is maybe Nevada, that well, Trump is like 50 to 42 or 49 to 43. So basically it's only 2-point edge now. The edge is a bit higher. So well, we definitely, guys, if you're watching price action from this perspective, you might see that markets go in desired directions. For example, I will show you today's analysis of euro dollar and pound dollar that I did, but it's a bit slow. I mean, the market is waiting now, so it's not the same as a normal trading day. As Chris said, it's also about news trading, because you simply cannot position yourself in the market and expect that price will respect trends and levels, because these kind of events are actually spike trading. Those events can turn the tide in any direction. I really reckon that things will get very wild, and well, we need to actually, if you trade it, you need to try to break out trade. So that is the thing. Also, the edge between Clinton and Trump is narrowing, but the latest clearance on FBI actually spiked most of equities. To be honest, yesterday we saw a huge gap on dollar yen and mostly on equities, and I thought that the gap might have been closed. But the thing is, the gap on dollar yen has not been closed yet, and we still see that dollar yen is a bit higher than it closed on Wednesday. So dollar is under pressure. I mean, it was under pressure, but at this point it seems that it's again gaining its ground, and that is what I suggested today also in my euro dollar and pound dollar technical analysis. But you can see that actually it's been a bit of slow price action movement, really a bit of slow price action movement. I'm watching to see if anything will happen during Asia session, but I guess, I mean, we really need to wait. So I also would add something about US voting, guys. I don't know how many of you actually know how US votes go. It's a bit different than in other countries. It has two stages. You have popular vote, that is voting by public, and then you have the elected politicians in each seat that do an overall vote for the president. So it has two stages. The first stage is popular vote, the second stage is electoral vote. So I mean, it's a bit of strange setup. I mean, because I know we have usually in Europe totally different setup. But for example, Al Gore in 2000, he won popular vote, but he lost in the electoral vote. So Clinton has advantage apparently in electoral vote. That is what I mean. That is what counts after all. But Trump could win popular vote. So the outcome of the people votes determines which party gets a seat in parliament. That is that's the American system. Okay, it's the American system. So it's different it's different among countries, but definitely, for example, in Australia, I also know that it's different. They don't have electoral vote. Usually it's party which gets most seats, and there are a lot of coalition governments and so on. But it's America. In America it's different. It's different. So you also need to pay attention to that popular vote, electoral vote, and well, I mean, I'm very excited about results. I'm watching price movement. Really, I also did only one trade today. I actually shorted pound dollar, and then I got long. It was a scalp of pound dollar because I wanted it to my POC. Then I got long and I closed it for some 10 pips. I mean, the price is not moving much, so we are actually trapped in a waiting scenario. So from trading perspective, guys, as Chris said, as votes keep coming, also the situation on the price will also shift. So be very, if you trade, guys, you need to scalp this. You cannot position yourselves. Believe me, I mean, I tried to position long trade on, as I said, on pound dollar, but I closed it for only 10 pips. I mean, the price is really going nowhere at this point. Euro dollar was maybe a little bit better to trade. I will show you, I did a Forex Empire exclusive analysis in the morning, but it's still, I mean, it's a bit slow, okay? It's still very, very slow, and we will see other potential setups for US elections for all of you who will trade. I will give you my prediction. But answering basic Chris question, what he asked me, actually, that is my view about Nevada, about Florida, and about US electorate system, because as Daro is saying, voting system is a bit complicated. I mean, for me, it's still not logical. I mean, we have very different voting system in most parts of the world, but well, that's their system and that is what it counts, okay? Maybe Chris, you also have something to add about voting, or we can move on?
Yeah, no, basically only to show that you were talking about those electrical votes, so, or not electrical, sorry, how do you say it again? Electoral votes, I think is the correct word.
Electoral votes.
Yes.
Electoral votes.
So here you can see, folks, those numbers indicating those votes, by the way. That's why we have the map still here. So yeah, each state has their own number, basically. Some states have more. I think it's connected to the population. And indeed, what Nenad said, you could win the popular vote, but not necessarily be president. It happened in 2000, indeed. At this moment, it looks like I think there's a 3 or 4 point edge for Clinton at the least recent polls. So let's see how that plays out in this map. But it's very tight in some of these states, so that's going to be very exciting indeed. Absolutely. So I think we can move on then, maybe to take a look what Nen and I can basically expect, starting with the Trump win. If Trump pulls off the win, basically in a way an anti-establishment win, as it's called. Trump not the typical candidate for either Republican or Democratic parties. Not been in politics. We discuss all of that in the article blog, so I don't want to repeat that. But I think that Nenad and I are basically expecting then some volatility in the markets. The markets, in our opinion, are pricing in a Clinton win. So if that does not occur, I think they're kind of caught off guard a bit. The markets could see, I think, some I would say enhanced volatility. I think you could see really some quick ups and downs in the short term, but even in the medium term, I think that there could be some pressure on the dollar at first. But it's a complicated balance because uncertainty in the world basically it seems like a bit larger with Trump. That's how the markets see it. Now you might disagree with us on that, but that's just the kind of the general consensus that is prevailing at the moment, that Trump win. Trump generally as a candidate doesn't bring along the same kind of consistency that one would expect with Clinton as the winner. The markets see that as a bit of uncertainty, or perhaps a lot of uncertainty, depending who you ask. That itself is not something the markets like. That's why we could see enhanced risk, more volatility. But along that, in the short term, I would expect, therefore, stock markets to get a hit, the dollar to get a hit. But ultimately, maybe in the medium term, that uncertainty, the fact that Trump might hit hard with the trade deals and tighten that down, anti-globalization, anti-trade policies, those kind of things could then eventually, it could actually lead to some dollar strength again, because what happens when there's uncertainty in the world, the dollar gets bought, right? So it's a complex kind of mechanism that could play out. That's why I would expect a lot of volatility, a lot of ups and downs. And then it depends, once the Trump presidency starts, how does he profile himself? What kind of actions does he do? How does he present himself? He's not a politician, so he kind of has to show what he's up to. If the markets are pleasantly surprised by his policies that he's setting forth, that could continue. The stock market might then rebound from this initial fall. If he disappoints, if for whatever reason the market is seeing maybe some disappointing things in his first 100 days, there could be enhanced volatility. So it all, of course, depends on how things develop as well. But this is basically explains the volatility in my point of view. Now, in the short term, Trump is going to introduce tax cuts that could stimulate growth, but it looks like the debt position would be a lot worse than Clinton's position. So that could be good for the short term. In the long term, though, that debt is not stimulating the economy in a one-to-one ratio. More debt does not equal the same growth. So in the long term, it might, or medium long term, it might not be so good for the U.S. economy or for the U.S. dollar, as the debt kind of weighs, larger on the total economy. All right. So these are our prognosis, of course, based on all of the plans that Trump and Clinton have proposed. Now we're only discussing Trump. So yeah, that's my view. I think that Nenad agrees, but maybe he sees a few things differently. Nenad, so I want to check with Nenad here what he thinks about the Trump win.
No, 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 no. I don't see anything differently. Actually, uh, the only thing that I can say about this is definitely that tax cuts should create growth. And actually, the initial reaction to dollar can be that the dollar loses the strength after. But initially, guys, I'm talking about the initial reaction. But the thing is that. I think that safe haven demands can rise if Trump wins. Actually, yen, you know that yen is a safe haven and it's very correlated to equities. We will talk about it. But the thing is that now the biggest problem, guys, is that we don't have a very clear situation because since the latest FBI announcement, the lead, as I say, between Clinton and Trump has narrowed, and voters are definitely undecided. The only thing that I think, I mean, it's nothing for sure, right? But in my logic and what I think is that gold will strengthen no matter who wins. And we will talk about it also during the later stage of the webinar, but that is what I can say. I mean, no matter, doesn't matter who wins, gold should strengthen. And according to latest information, definitely we have that women, I think, more are supportive for Clinton, and men are more supportive for Trump. And that is also interesting thing to observe, but for me it's also very, very logical. And definitely what Chris has said here, actually, that it can create, the Trump win can create new debt for U.S. Also, what I think is that that can, I mean, it's not for sure, but guys, if you read a lot of information over the internet, you can actually see that there has been latest information about hackers threatening U.S. government. So if anything bad happens after U.S. Elections, you need to know that there also can be riots. And if we see any riots, now I'm also talking from perspective that, I mean, if Trump loses or something definitely bad happens to U.S. in that term, that it can bring people to streets, then President Obama can instate martial law, and it means that he will stay as president until the unrest subsides. Okay, so that there are a lot of different scenarios, and we also cover this Trump win, Trump lose scenario in our article. But generally speaking, initial reaction to dollar can be bad for if Trump wins, but if he is elected, well, I think that dollar can actually strengthen during subsequent years. So a lot of different implications, but as I said, I don't want to repeat again, but what is more sure, if I can say that, then other thing is that gold should rise no matter who wins. Okay.
So, and then if you want to talk about a Clinton win, what do you expect with a Clinton win?
Yeah, I mean, Clinton win, definitely market is pricing in Clinton win, guys. You can see that by dollar strength during Asia session. You can see by the gap that hasn't been closed on dollar yen. That is, I mean, it's a perfect example of risk on, risk off scenarios. You can see the dollar yen is going higher. It simply is not dropping to close the gap. So Clinton win is definitely priced in the markets. But the thing is, as Chris said here, this is very clear in this slide. Debt will grow slightly, okay? And I mean it's normal. Debt will grow slightly, but to me it's more important what will happen to trade deals, okay? So to trade Pacific and to NATO, so we definitely need to see about the trade deals because, you know, Clinton family has been strong in US and definitely it's a strong family, guys. And you need to know that the family is, of course, supported by money flows. So according to Clinton, her politics was to actually stimulate the economy by making some new tax plans, and it can stimulate growth. That is why I'm saying whoever wins dollar, I mean the initial reaction will be different, but later dollar should gain strength.
Yes,
So I
indeed.
mean you still guys need to see, you need to know that dollar is safe haven and it will be safe haven currency until something really radical happens to US. So from trading perspective, you just need to watch the initial reaction.
Yes, I totally agree with you, Ned. Dollar is very well set for strengthening, technically, fundamentally, with a potential interest rate hike as well. Maybe in December or otherwise beginning next year. Perhaps they were waiting for the presidential elections as well to have that basically, behind us, and then they can move forward with their monetary policy if the economic conditions are looking good. So that is all basically a supporting dollar continuation. The only thing is in the short run, that could be some volatility with the Trump win, the Clinton win, less reaction. I agree, perhaps just a calmer reaction, but ultimately then I would expect the dollar to march forward with less volatility if Clinton wins. The tax plan, yeah, basically, if the government spends a bit more in infrastructure, for instance, that could stimulate aggregate demand. Also, if the middle class get a bit more taxes back, that could spur consumption, and that could lead to the economy kind of catching a bit of track there and starting to grow a bit faster than we maybe have seen in the last uh, 7 years or so, although it is more than what we've seen in the EU. Obviously, it's not the typical recovery that we've seen usually in the last 30 years, even in the U.S. Now, that could start to accelerate if Clinton's plans do materialize. Maybe not necessarily in the short term, but maybe 2 to 4 years from now, we could see a bit more of that. But with less debt. That has to, of course, remain to be seen. That has to be translated in practice. And that all depends on whether these policies will work and how they are implemented, etc. But this is basically kind of the current kind of ideas with the Clinton win and the Clinton policies. So let's take a look a bit about that debt. We talked about it a lot already. This is how you can see the differences here. This is the above, first of all, is the debt development. The wars basically creating a lot of debt, recessions and depressions adding to it as well. Those have been the most, basically the biggest periods of debt increase. And you can see there were times where debt was a lot lower. After the Second World War, it dipped a lot. In the 90s, it dipped a bit. And then if you go back to the 20s as well, and then the previous decade as well. Now, in recent times, we've seen a bit more of an increase when the Great Recession happened, and Bush also slightly pushed it up with his tax policies at that time. Now, with Trump, you see it going up to 105%, Clinton staying at 86%, basically above 100% between 100 and 110. You're getting into a gray zone according to economists. They're saying, well, at that point, the market might start to punish you. Now, with the dollar, it might be a bit different. The dollar, the U.S., the biggest economy in the world, the dollar has a big reserve role, so maybe at 105% there's nothing wrong with that. But on average, if you look at the world, that's where they say is a cutoff level. So the U.S. would be kind of in that zone at least. Regarding the dollar, we talked about that already. But here you can see it from a technical point of view. Some charts, basically, these ups and downs indicating, let's say, the short and medium term. The initial reaction might be down. Then we might see the risk, the safe haven status kick in, and you might see a bigger upside. You may see a correction, but ultimately I do think the dollar will be ready to go up after all of this volatility. But it could maybe be 6 to 12 months from now if I had to make an estimate there, just because the market might be waiting for Trump and his presidency to start to see how he does in 100 days. That could bring a lot of volatility there as well. With the Clinton win, I do expect a bit less volatility, and there might be just a small dip as a natural kind of pullback, but otherwise I do expect actually then the euro dollar and pound dollar, for instance, to break lower and the dollar index to break higher. These are both dollar index charts, by the way. Regarding the Fed, now that could be a bit of interest, discussion about what we could expect from the Fed. Is it going to raise the hikes? Is it going to raise the interest rate in December or beginning next year if Clinton wins? And that I think is probably a good scenario. I do think that the political event is behind us, so I would say there's a good chance. I think the market is agreeing. I think I don't know the percentage by heart. Maybe Nenad will know in a second, but I think that considering these policies, there's expectation of moderate inflation, so they might hike it by 0.25%. Again, finally, the second time in 8 years. And that might stimulate this dollar strength again, of course, as well, and that could pick up some more dollar upside. Stocks, I think that Clinton will be fairly moderate on the regulations. I think that U.S. stocks could go up. Don't forget that the Clinton is not necessarily threatening the trade policies that much. Officially, she's against the TPP, but maybe with some adjustments, there could be maybe some potential there to get the TPP through and accepted. So I think for global U.S. stocks, I think Clinton is more in favor of globalization and trade policies. I think there could be some positive upside on that from a Clinton win. So did you want to add something on this part, Nenad? What do you think about the Fed rate hike?
Yeah, about a rate hike, definitely I explained it a lot of times in different articles, also with Forex 3 that I do there, to bi-weekly interviews. If you want to know more about hike, you definitely need to watch Treasury. And for example, we can see that 2-year notes were gaining after some time. So Treasury was 2-year notes were gaining, and definitely it can tell us that there is a probability of a Fed hike by December, but it actually because treasuries were gaining, we had a lower percentage of a possible rate hike. Now, why does it happen? Because of that FBI announcement. The thing is, just by watching at bond and stock market, we can see what can happen if Trump is elected. Market. Now, guys, I'm talking really about market perspective. Don't get me wrong, I'm not inclined to any candidate. From market perspective, market made it clear and that they think that Trump victory would be bad for stocks and it would create more uncertainty in the economy. That is what market is telling me. Market. not Chris, not myself. It's market, and therefore it might the market reaction might hold the Fed off from raising rates. So that is what I think. I now at this point, I think that the chance for a possible rate hike is a little, it's just slightly lesser than it was like maybe a month or two ago. So that is what actually I was looking into, and I mean, market does not want to take any risks. Okay, so it might be changed if Clinton wins, but if Trump wins at the first time, I don't think that there will be any rate hike.
So for a Trump win, you think that there could be some basically a bit of a cautiousness with the Fed at first before they might hike,
Yes.
or you think they will be very cautious?
Yes.
Yes. Got it.
Definitely,
But perhaps.
definitely.
Yes.
I mean, you see, you also analyze the price, and you can see definitely that stock market is not actually liking. They don't like that Trump willingness to win.
Yes, there was indeed there was a survey, or not a survey, but they did a research that showed that basically the stock market upside was correlated with Clinton being ahead in the polls. So market is definitely showing absolutely beyond doubt that they prefer the Clinton kind of victory according to their, the price movement itself. Regarding, I could see why the Fed might be cautious at first with the rate hike potential there if Trump wins. I do think that eventually they probably could hike it if Trump, implements those tax cuts, and the economy, because of those tax cuts, gets a bump, let's say, gets a bit of a hike because of that, and the economy kind of starts to push a bit forward because of that, then the inflation might slowly but surely reach levels that they are looking for, the 2% level, and then the Fed might do the hike finally, but it could be a bit later than with Clinton, indeed, and might be maybe a year from now. Who knows, indeed, yeah.
Yes, that's also what we stated in the article. Basically, now at this point, it's a bit of economic uncertainty, and it will be if Trump wins, but it will subside, and there will be a space for next rate hike, but not in December. It will be prolonged. That is what I was trying to say. I'm not saying that there won't be any rate hike, but it won't be in December. Still, if Clinton wins, we need to see what treasuries will tell us, and then we can make a judgment if there will be a hike or not in December. But what I'm sure, personally, I'm sure that if Trump wins, there will be no rate hike in December.
So, yeah, I agree with that totally. So let's talk just a bit about what could happen in the markets. You got to be aware of that, and then we'll take a look at the setups that we have in mind. But generally speaking, before we dive into and look at the charts more specifically, be aware of higher volatility, wider spreads, some technical problems, information dripping in. These are all things you want to be aware of and just be cautious of. All right, so let me pass over the screen now to Nenad. All right, there we go.
I will now share the screen so we can actually delve into our setups. Just give me a few moments. And as Chris said, actually you really need to be very, very cautious about potential volatility. And I'm sure, I'm 100% sure that there will be a huge volatility. So it's up to you guys if you actually want to trade or not. But be aware that that kind of volatility, you definitely need to trade as breakout and scalp trades, not as positional trades, simply because it can create a huge gap in your account if as news keep coming. So as Chris said, it will be like Brexit. So things can shift in any direction as news keep coming in. We don't know, Leon, how much spreads can widen, really. I'm not sure. This is now the first time that I will be actually watching this live, and I don't know, because obviously every broker has its own policy, but you also have volatility protection tool that you can activate in your traders room. So please navigate to your traders room, and there you will see under the account, you will see that actually you can apply for a volatility protection tool. I don't know how much the spreads can widen. I mean, I will watch it, but I don't think it will be. I mean, just my logic is telling me that it might be like Brexit. So whatever Brexit was in terms of GBP spreads, it probably will be the same. Yeah. Yeah, I will definitely update. I will do probably updates on Twitter, but I probably, I don't know, it's like 1 a.m. I think in the morning, but yes, I can cover that, but not if it comes later than 3 a.m. because I really need to have some sleep, but I will be covering that, yeah, live on Twitter. So just we will go through a quick recap of past week results. 31st of October, euro-dollar position on -40, euro-dollar revised +80, GBP-dollar position on 60, Australian-dollar 30, New Zealand 70, dollar-yen, it was either +20 or -30, total pips pull 220, and definitely the trade of the week was Australian-dollar New Zealand. Okay, this is standard disclaimer regarding how we take trades and how we trade on session recap, but now I need to say that this will be a little bit different. Next Monday we will have standard session recap, and then everything will be fine. But at this point you need to know that the only thing that is really valid here is you need to respect your stop loss. You will trade this as breakout trades, scalp trades. Definitely use profit stop if you are in profit, guys. Don't let your trade run. Do not be greedy. Don't let it run too much. So you need to use profit stops. And this thing, first touch of the zone, might not hold for our U.S. election trading, simply because there will not be a lot of traders who will trade U.S. election as positional trades. So because of that, you need to know that price might be whipsawing on every single time frame. The question, what are profit stops, Paul is asking. We covered that in our webinars. I've been talking about profit stops really a lot of times. I will tell you quick what a profit stop is. For example, if you take a trade here and it goes in profits, your initial stop loss is here. As the trade goes in profit, you actually move your stop loss. Okay, what I usually do is, if I am 20-25 pips in profit and I see that the market is climbing up or it's ranging, well, then I tend to actually move my stop loss to +20, effectively securing a free ride. What I also do is I cut my trade, I actually scale out, and then I put the rest to either break even or profit stop. It's a form of a trailing stop, but you do that manually, because it's not a classic trailing stop as you do on your platform. You need to know the level also. So if, for example, a currency pair is breaking through resistance, I tend to move my stop loss 3 pips below the resistance. If it breaks through next resistance, then I move my stop loss 3 pips below next resistance. That is how I do. I just move my stop loss. I also did some live trading videos where I actually showed you can do that on Admiral Market Supreme Edition. You just need to left click your stop loss and then move it in profit. That is, guys, what banks do. Okay, that is what banks do, and that is what I warmly suggest if you actually want to trade high risk events such as, well, US elections, right? Martin is asking, do you see brokers restricting leverage? In the US, my broker is lowering leverage on GBP pairs and warning they may decide to spot lower leverage across the board. Not very helpful. Yes, in US I have heard that is actually happening, but on EU brokers, European brokers, I'm not sure that they have implemented that. I don't think, yeah, margin requirements are also increased, Jack. I know. I mean, guys, trading in U.S. is really, I mean, sometimes it can be really tedious. I mean, tedious trading and hectic. Also, you have also first in, first out rule, so-called FIFO rule, right? And I mean, I traded also in U.S. account back in days, but now it's a huge. There is a huge difference between trading with European brokers. So yeah, I think that there will be some restriction in US, and definitely, guys, I might expect that some margin requirements can be increased. I mean, there can be increased, but not in that sense that you won't be able to trade it. Yes, Martin, first in, first out rule, no hedging. I mean, well, it's simply hedging is out of the question. In European brokers, I don't think that there will be some huge changes comparing to US brokers. So that is my opinion. Okay, so this is what we should follow. So use profit stops. Try to go with breakout and scalp trades. And I will just go quickly through previous week setups, and then I will show you what we might expect from different currencies during the elections and slightly after the elections. So euro dollar was in downtrend. I actually had a losing trade on this one because I couldn't have known that FBI would actually come with something that, well, meant de-risking for currencies. So euro was up, dollar was down, and actually that sort of event, mini event, spiked the stop loss, and euro dollar was minus 40. I'm sure that if that wasn't the case, this trade would have been a winner, but well, who could have thought that it could happen? I mean, then I did revise setup, and you can actually find a revised setup also on the internet. This was my analysis, and this was actually revised setup on November the 3rd. Euro dollar bullish order block marks the support. I was clear here with levels because I presume that it will probably proceed higher, because there was no technical reason for euro dollar to drop, so I did a revised setup. I told you that sometimes I can do a revised setup if something happens in the market. Usually it's not that often, it's very, very rare, but as we could have seen, well, that mini event actually called for another action on euro dollar, and this was what I expected. So if you traded this revised setup and you jumped in where POC was, actually this was our POC spot. You could see that euro dollar went really heavily to the upside, okay, and it was good for all euro dollar longs. Pound dollar was actually a good trade because we had a sell position at 22.80. I said 23, and then on Twitter I said, guys, watch pound dollar, it's dropping. It could start a preemptive drop before it actually make those 5-10 pips to POC zone. So this was very good trade. On second rejection, it also dropped like 30-40 pips. Here you see second rejection, but it was not that good as that possible first rejection. Actually, this price spiked into POC, and it was 40 pip drop, but here initially this was a bigger drop. Then again the event happened, and you see Australian dollar We had two possible trades, 76.40 sell position, 75.20 was buy position. Well, what happened? Again, they're risking, and Australian dollar went initially, guys. Initially, I thought that it would go to actually give me a buy position because this was the webinar. It started to drop, but then it just hit POC zone and dropped. I mean, it dropped. It dropped to give us 30 pip win, but before that, it came very close to stop loss. Stop loss has not been hit. You can see clearly here, well, I mean, it's not the best trade, but it was still in profit for all of those who were patient enough to wait and respect their setup. Okay, here. Australian dollar New Zealand was definitely the trade of the week. I like this setup, and it was a bit good. I mean, the first we had a buy position at 1.0630. Here, the buy position was initiated here. The price went in a drawdown. Well, the drawdown was not close to stop loss, and price spiked up in our direction, giving us nice profits on Australian dollar New Zealand. And finally, dollar yen. Well, dollar yen again, it was in uptrend, but their risking caused dollar yen to drop, dollar down, yen up. It was definitely move versus dollar, and you can see here we had a possible buy position, but well, that was not good. I mean, you could have made 20 pips at maximum, but I count this as a loss. But overall, it was a good week behind us, considering all these fundamental shifts that can cause revised scenarios in technical analysis. Okay, for euro dollar, guys, this is what I see, and this is what I told you today. So I'm not sure how many of you actually follow the analysis that I do on Forex Empire on Mondays. But today, that was, yeah, this was that analysis that I did on Forex Empire. It was early in the morning, guys. Okay, it was early morning analysis as London Open. They published it 6 hours ago here. You can see here, guys, actually, I was very clear. This was POC zone, 1.1075. 1090. The price was below POC. It came, hit POC, and then it dropped. So euro dollar for me at this point, guys, is actually it's bearish. But what I can say here is you need to be definitely paying attention if the price gets above 11.45, guys. Okay, 11.45. I will open euro dollar chart. This is euro dollar. You can see it here. Okay, euro dollar. And guys, breakout trade might happen if the price spikes about 11.45. That will be a bullish breakout trade. Okay, bullish breakout trade. For people who actually want to trade to the short side, you should have done that already, guys, because short-term trading told us that we could have actually we could have shorted it on intraday time frames, where I told you today, here, after the analysis, price came in, spiking the lower boundaries of POC zone 2 times, and then it dropped. You can see here clearly this is these are weekly pivot points, and here the price is standing at support. So it needs momentum push below L4 to proceed further down. If we see a dollar weakness, guys, then breakout trade of 11.45 will be a good trade. I don't see anything else concerning euro dollar because this was positional trade. Okay, and if you did it, I advise you to scale out and protect your profits. Here I think that there are a lot of stop losses. So if we see a price spiking up 1.1140 to 45, at exactly at 11:45, it will gain a momentum push, collecting all stops towards 11.95, eventually reaching 12.80 on dollar weakness. So from this perspective of trading U.S. elections, there is no standard trading. We have trend, then let's see POC. There are no POC zones, guys, on U.S. election trading. It's different. It's spike trading. It's breakout. It's actually scalp trading. So for this, I probably will trade euro dollar as a scalp trade if it breaks 1.1145. That will be a signal for a stop grabber potentially towards these levels. But you need to watch dollar index for that. If dollar index keeps falling, euro dollar will keep gaining towards next level. So pay attention to that. That will be very important, and that is the breakout trade I'm counting at. There are no short setups except for what I showed you intraday setup, okay? For pound dollar, guys, I did the analysis today, and you see that POC zone is actually rejecting it. So for intraday, guys, 23.90, it gives us long targets. So again, guys, if you see that dollar is weakening, this is your final target, 2620. Again, I'm stressing out one more time, guys. This is if dollar keeps losing. So pay attention to dollar index, guys. Okay, you see that on intraday perspective, the analysis has been respected. But as I already told you, I did only 10 pips. And now I'm not trading pound dollar. I did intraday analysis. Okay, it went good, it was rejected. But at this point, there is no intraday trading. There is only breakout trading. So, for example, if you see that the price is here in this region, 23.50, 23.95, 24, just before US election, and you can see that Clinton is clearly winning, and you can see that dollar is dropping, for example. It doesn't matter. Clinton wins, dollar strength or dollar weakness. You need to watch dollar index, guys. There is no if, what if. Price will tell you, watch dollar index. Dollar index down, pound dollar up. And here, the price on heavy dollar weakness can go to 26.20, guys. 26.20, it's weekly H3 pivot point, and you can see clearly that weekly pivot points have been respected. On dollar weakness, I expect pound dollar to rise. On dollar strength, guys, maybe if Clinton wins, you will see initially dollar strength. Okay, so watch dollar index again. Dollar index up, pound dollar down, and here this is what I see, 22.80 possibly. 100 pip initial drop, but because pound is in intraday bullish mode, I don't think that it can drop so heavily, breaking, L5 weekly pivot point. So if it drops heavily, if something happens and it drops really heavily, then watch for this level for a possible buy position, 2090. Historically, guys, this is the level where buyers are. You need to give price a bit of that breathing room. Okay, you need to do that. Because if you don't do it, chances are that you can get stopped out. You can see now, pound up, pound down. Markets are a little bit nervous. This is telling me that market is not this, it's undecided yet where it can go. Breakout trades for euro dollar, guys. If you want to trade breakout, you need to put your stop loss below last hourly low. So if, for example, if you see that price is breaking through 11.45, you can go also as trigger happy trade and just treat it as a scalp trade, one-way trade. Click hit and run tactics. If you want to, I really don't advise you to hold either trade. Whatever trade you're trading, do not hold it for long, guys. Treat it as breakout scalp trades. Initially, stop loss should be put below 1 hourly low. That will be shown on the breakout of 1140. That is what I can tell you. Also, if the price is between 23.90 and 23.50, just before the elections, well, then it might be spiked to the upside. But if it breaks 23.50, guys, if it breaks, breakout might happen during Asia session. Okay? Then initially, pound will be, it should be dragged towards 22.90. Okay, 22.90. Soren is selling. Clinton win would mean pound up. Well, theoretically, guys, I'm saying it's theory. Yes, if Clinton wins, that means, it doesn't mean that pound dollar will go up, but dollar index might go up, and that means pound dollar will go down. That's theory craft, because from what we can see, dollar is supportive of Clinton, and initially, I said it on the beginning of the webinar, initially it isn't supportive for Trump. Long term, dollar is supportive for Trump, but initially, spike trading is telling me that dollar is supportive for Clinton. If Clinton wins, then pound dollar should drop initially. But I'm saying, if you see that just before the elections, it keeps the range between 23.50 and 23.90. It may be setting up for spike up, but you need to watch dollar index. Dollar index is your truth in US election trading. Because when you open dollar index, you will actually see where it is heading, guys. Okay, dollar index, it's very important to have it on your charts. Okay, I will show you here. Okay, on standard account, you can see here. See, it's going up at this point, and pound dollar is now losing strength. Euro dollar is losing strength. Watch this. This is weekly breakout point. If this gets broken, well, pound dollar will it will go down, and vice versa for breaking through H3. So keep your charts. Okay, keep your charts open. Okay, so pound dollar setup. Well, we are already over the time, but I need really to show you this. Dollar yen, for me, guys, this is a little bit more clear. Buy dollar yen if Clinton wins, because Japanese yen is sensitive to risk events, and Japanese yen will weaken. Okay? Equities, stock markets will go up. Dollar yen will go up. If it drops, long 102.50. If we see a breakout of 105.20, it can be a breakout towards 106.20. Initially, it can be a spike of 100 pips. But I'm saying it can change as results keep coming. So initially, guys, if you see a drop initially, this is the zone for possible buy scenario. Here, the zone for possible buy trades here. And breakout above 105.20, guys. Okay, above this region here, this will be a breakout. This is bearish order block, guys. If bearish order block is broken, this is clearly bearish order block, okay? Clearly. If this bearish order block is if it's taken, if it's broken, well, then we will definitely see a move to the upside. Watch this, guys. This is the region. If the price breaks this, it should go up. Okay? It should go up. Watch this. Very clear to me. So breakout on 105.20. And possible long on Clinton win. If Trump wins, I expect dollar yen heavily to the downside, but I think that 100 level should be protected. Rounded number should be protected. Okay? Dollar Mexican peso, guys. I mean, guys, clearly I don't need to tell you levels. The only thing is watch for 20 to 22 if Trump wins. This is Trump trade, guys. Dollar Mexican peso is Trump trade clearly for me. You can see that dollar peso has, if you have it on your charts, you can see that it dropped heavily. Okay, dropped heavily. So dollar down, Mexican up. But if Trump wins, then it will be vice versa. So again, guys, market is in favor of Clinton win, market. Because dollar Mexican peso has dropped a lot. Clearly, if Trump wins, buy on dips towards 2022. So I guess for dollar Mexican peso traders, well, they want a Trump win because this, I'm very sure that this will happen. If vice versa happens, that Clinton wins, then dollar peso will drop towards 15, as I said in the article. So buy on dips on Trump trade, or sell on rallies, and sell if Clinton wins. Okay? And other setups, I need to show you Australian dollar SP 500. I will be quick with this, guys. And I will answer also gold, guys. Why gold will gain. First, I will start with gold. Okay, I will first start with gold, and I will tell you why I think gold will gain no matter who wins, guys. Okay, this is 1 hour. Okay, switch to 4 hour time frame. Okay, the thing is that gold is always opposite, right, of dollar. And the thing is, gold prices, according to some banks, gold prices will spike no matter who wins, because definitely we have a very, very strong uptrend, guys, on gold. This is what market is saying, a clear uptrend. And I personally don't think that this trend will be disrupted just because, let's say, Clinton won or Trump. Okay, I don't think that it will be disrupted. It might be a temporary distraction for possible movement. But guys, gold is definitely more responsive to interest rate concerns than to presidential politics. So we will definitely have volatility with gold, okay? And I didn't find out anything price congestions during presidential election campaigns, because simply it's more related to interest rate concerns. Okay, also gold probably will not see dramatic rise if Clinton wins, if compared to Trump. Because if Trump wins, gold will spike heavily. But if Clinton wins, have in mind that Clinton policy also will have inflationary implications. Inflationary implications probably imply higher gold prices, because gold is used as a hedge against inflation. So that is my understanding, because it's definitely connected to interest rate decisions, not political elections. So also adding to this is long-term trend on gold that will not be disrupted because of the politics, guys. It's same with China, guys. China is not interested who will win. For them, they are definitely not interested in that. Gold also. Gold is not interested. You will see ups and downs. But I think that you can buy the dips on gold. So watch for technical levels on 4-hour chart. Watch this trend line, guys. And if there is a dip, we can try to buy it. So I mean, whatever it might happen, I think that gold will be bought on dips, okay? Australian dollar also, guys, watch dollar index. Watch dollar index. Australian dollar is connected to copper, guys, okay? Copper is high commodity, okay? So what I can say is, same as equities. If Clinton wins, okay, probably Australian dollar initially will go down, but then it might surge up, okay? Because copper is risk on, risk off commodity. If there is risk on, copper goes up, risk on, the risk off, copper goes down. So on Australian dollar, probably a drop, then again buy and dip. But it won't be a huge implication on Australian dollar market. I don't think so, really, that there will be any huge implication. Pound yen is more interesting to me. You see, pound yen has been going up. But guys, this was caused by news. I mean, during Asia session, I might expect that this, you see, this was actually the gap here. You see, the price is trying to go down to close the gap. So this gap might be closed during Asia session. So what can happen is, again, this might be closed, then it will be ranging mode. And equities and stock markets up on Clinton win, including pound yen. If Trump wins, stock and equities down, including pound yen. Don't forget that pound yen is heavily correlated to equities. So if you see, guys, that pound yen is dropping heavily after the elections, guys, simply watch for Camarilla. Camarilla levels, watch this. This was bullish order block, and if this level, 127.40, breaks to the downside, we might see, guys, this level, easily 140 pips down, easily. If it gets spiked to the upside, guys, well, then you need to open daily chart and watch for these levels here, 130, 132 even. It's clear to me. Stocks up, equities up, pound yen up, vice versa for possible if Trump wins. Okay? And finally, dollar CAD. Again, guys, dollar CAD is going up because dollar is going up, but it's slight grind to the upside. Okay, this is a slight grind to the upside, and at this point, price is very indecisive. This is, for me, spot to go short on dollar CAD if it happens. 32.70. Below that, guys, we might see a dollar drop towards 200 points here. Okay, if dollar gains strength, well, clearly this is implying, again, inverted head and shoulders leaned on 4-hour time frame. Market is pricing in Clinton win, guys. It's very clear to me. You see here, dollar CAD inverted head and shoulders. Dollar up on Clinton win. Okay, guys, historically, it will be probably towards previous order block here, even 36, okay, because this was previous order block. You see strong sellers here and 36. So follow this. If you trade it, be very careful, guys, very extremely careful. Do it with a low risk, because low risk will keep you safe if you're in the market. If you see that your position is going in your way, protect the profits, 100% protect the profits. Okay? Do not waste your profits, protect it, and do not revenge your trade if you lose. Do not revenge it. Volatility will be huge. Okay? But in the case of Clinton winning, dollar should gain strength and vice versa. So pay attention to upcoming moves. We will try to cover it. I will try to cover it. And of course, I might do 1 or 2 setups, but I will really need to see how volatility will respect the price. Because if it gets really, really wild, I will stay out of the market. But if you want to try to get something out of it, then this is what is, at this point, it looks logical to me. Okay, guys, so this was it. If you have any question, yes, I might do Twitter comments, Martin, indeed. So probably I will do that. And yeah, you can ask me on Twitter, of course, if anything is not clear or you want a suggestion. So yeah, my Twitter account is Tarantula FX. So just follow me, guys, on Twitter. I'm always updating the analysis, whatever. Chris also. So this is, you should follow us. So let's see what we'll have. Be careful, guys. I'm very excited to see what will market give us and definitely the outcome of these elections. Thank you for listening. Thank you for your questions and comments. We expect to see you soon, guys. Cheers. Talk to you soon.